Good afternoon. Thank you for joining our webinar today. Before we begin, let's cover a few housekeeping items. We will be recording today's session. The on-demand version of this webcast will be shared with you via email in the next few days, and you can also access this webinar using the audience link that you received via email today. At the bottom of your screen are multiple widgets for you to use. These are all resizable and movable, so please feel free to move them around to get the most out of your screen space. If you have any questions during the webcast, you can submit these via the Q&A widget. We will try and answer these during the session, but if we run out of time, we will follow up via email. Please also note that we record all questions. We will be using interactive polling during today's session and encourage you to please participate. There are additional materials available in the resources list, so please download those that you might find useful. And you can also review more about our speakers via the speaker bio widget. For the best viewing experience, we recommend closing any program or browser sessions you might have running in the background. This will conserve your bandwidth. And this webcast is being streamed through your computer, so for the best audio quality, please make sure your computer speakers or your headset volume is turned up. Some networks might cause your slides to advance more slowly, or if you perhaps have a problem with your video, please make sure that you press F5 on your keyboard or Command R on your Mac. This will refresh your browser page. We do value your feedback, so please do complete the pop-up survey at the end of this webcast. I am honored to introduce our moderator for today. He is the Senior Regional Head of the Middle East and North Africa at the CFA Institute and a CFA charter holder, William Tohmé. Over to you, William.
Thank you, Renee. Thank you very much. I hope you can hear me.
Yes, perfect.
Great, thank you. I would like to welcome everyone who joined this webcast, this very important webcast. And the good news is that we're going to spend an hour together navigating through the ESG environment in our region, but also getting insight from great experts on the topic. So I would like to start by welcoming the panelists. Elena Philipova. Elena is Global Head of ESG at Refinitiv. I would like also to welcome Rami El-Dokany. Rami is Secretary General, Arab Federation of Exchanges. I would like also to welcome Khalil Bawab. Khalil is the CEO of Misr Capital, Banque Misr Investment Banking arm. Welcome to our panel. I really am delighted to be on an ESG webinar. And the reason is, through the pandemic, we've been all asked to stay at home, stay safe, not drive our cars, not use planes, and not pollute the planet as a consequence. And this gave all of us the opportunity to read more and to be conscious about the pollution we've been generating to the planet. And I'm conscious global growth, global activity will generate pollution, but there are ways now, and we are smart about polluting less, creating cleaner environment, but also being very social, very much aware of our social impact, our environmental impact, but also on corporate governance, how we can fix things, how we can improve the way we've been working, we've been stewards and respecting the planet where we live, the society where we grow, but also the trust that our investors have put in us. And, you know, I'm from CFA Institute, and we put first and foremost trust, ethics, professional excellence, and ethics, of course, and all for the ultimate benefit of society. So I would like to believe that the good intentions that have been developed throughout the pandemic and throughout the lockdown will stay with us, at least forever, and will stay within each and anyone's behavior, thinking always about environment, the society where we grow and thrive, but also the trust as stewardship is the best way to go when you are handed with assets that don't belong to you, but belong back to the society. So all what we do is for the ultimate benefit of society. And I hope this panel also will give you more insight about how we can incorporate sustainable finance into your investment strategies. So let's start with a polling question. And the polling question will be the following. Is sustainable investing part of your current investment strategy? Yes, no, or I'm planning to incorporate this within the next 3 months. The floor is yours. Please feel free to choose your answer. So it looks like we have 20% planning to incorporate sustainable investing into their strategies in the next 3 months. But there's a majority of 80% already doing that. So that's an encouraging start of the polling. First of all, it works. Second, we have a majority of like-minded people joining the call today. I would like to start by asking my first question to Rami El-Dokany. Rami, can you please give us a regional overview for ESG and sustainable investing? Also, can you highlight the potential growth, the opportunities for the Arab exchanges and the investors in the Arab world regarding ESG and sustainable investing? Thank you.
Fantastic. Thank you, William. Thank you, everyone on this panel. I'm very pleased to be with you today. If we want to talk about the regional picture in ESGs in the Arab world, it's still in its infant phase. There's still a lot to be done. However, we have seen lots of traction during this year and late last year. Still in our part of the world, ESG is a nice to have kind of information in the annual reports of listed corporates. And the G part of ESG is usually the main dominant part when it comes to governance because of the regulatory restrictions that all listed corporates have. So the G part is always the more dominant part of any report. We have seen corporates started to differentiate between CSR and ESG and their engagement with their environmental commitments to the planet, but still we do not see accurate ESG reporting or timely reporting on that. However, exchanges are doing too many things in that regard. We have seen many exchanges in the region issuing their own ESG indices. We have seen that happening in Egypt. We've seen that happening lately in Dubai. And I think Saudi Arabia is coming up with their own index as well in Tadawul. So it's being there. And our partners in Housekeeping as well issued with the IFC a few years back another ESG, a pan-Arab ESG index, a generic ESG index. So the will is there, the commitment is there, but it's still very infant in this part of the world because globally it is still I wouldn't say unclear, but there are too many different aspects of how to deal with ESG, especially when it comes to ranking and measuring the ESG performance. And there's no standardization for measuring ESG performance on any listed corporate. So it's still a bit confusing for everyone. In our part of the world, we are trying to push heavily for listed corporates to start adopt ESGs. We have seen commitment from our member exchanges to promote that on their exchanges as well. We have created under AFE's umbrella a sustainability committee in order to cater specifically for that topic and make sure it is being met on timely manner. We work with global institutions like the CFA, like the IFRS, to try to put some standards for the ESG reporting or the sustainability reporting ideas.
Great. I would like to correct the results of the first polling question. So it was, is sustainable investing part of your current investment strategy? And 77.8% said yes, 11.1% said no, and 11.1% said I'm planning to incorporate it within the next 3 months. So this is the latest update on the polling question. I would like now to ask a second polling question, and the question will be the following. What are the barriers to you utilizing sustainable investment strategies? Is it lack of data? Is it lack of knowledge about sustainable investing? Drivers for integration? Or I don't see the need to incorporate ESG and sustainable investing? Please feel free to vote now. Let's see if we have the results already. So far, what are the barriers to you utilizing sustainable investment strategies? 33% think it's lack of data or believe it's lack of data. And 66% believe it's drivers of integration. Okay, great. So let's move now to our second panelist, Elena. I would like to ask you if you can please give us an overview about the global interest in ESG. I know you're very much involved with the European Union, and I would like you now to, if possibly, introduce the low carbon index, the methodology, the climate indices of ESG standards, but also starting with a global overview of the interest in ESG. Thank you.
Thank you, William, and good afternoon, everyone. As mentioned, my name is Elena Philipova. I head up ESG for Refinitiv. Refinitiv was previously the financial and risk business of Thomson Reuters. And as mentioned, I've also been quite involved with the European Commission and European regulation on the topic of sustainable finance as a member of the technical expert group appointed by the Commission 2.5 years to support the development of standard. We at Refinitiv have been enabling sustainable investment strategies for close to 2 decades now. And although data still is cited as one of the challenges for integration of ESG and sustainability into investment decisions, we've actually been servicing the industry with ESG data for close to 2 decades. So a lot has changed in the data space, and we can certainly go into more detail during the webinar today. I really want to take a step back and reflect on what's happening this year and what are some of the key market trends and drivers. I was quite interested in, and it was a bit surprising to me to see the audience responses to the second poll question, where 3/4 selected drivers for integration as the biggest barrier. So that means that that's something that we should unfold and tackle during the webinar today. So, wow, 2020, I think we're all going to remember that year with mixed feelings. What a year it's been. And many markets felt the shocks of the COVID pandemic on the global economy. Our lives changed in a way that nobody could imagine. And data became even more critical to inform and actually enable resilient recovery. COVID will not be an isolated pandemic, and I think that's a very important point, that if we have only a few takeaways from the webinar today, I would say that's one of them. There is a lot of evidence, and experts have been warning that we should expect more pandemics. Really what we're entering is a decade, if not century, of volatility and shocks on the society, on our economy, due to environmental degradation, changes, social challenges presented to our society. So building resilience into everything is essential. It's critical, so that we're prepared for that volatile future that's ahead of us. And resilience makes us to want to bounce forward after such shocks, not bounce back. So we have a unique opportunity to develop a structure, a process, improvement that allows us to move forward, move and bounce forward. And considering adaptation, physical resilience in the face of the rapidly changing climate and increasing climate impacts. So this crisis really is teaching us a very important lesson, a lesson of how interconnected and aware we ought to be around social, economic, and environmental resilience factor that need to be addressed in combination to be prepared for the future state of the world. So 2020 really taught us that ESG and sustainable investing cannot be nice to have. And I think that that's a very important point as well to think about and reflect on, and what role each one of us plays in this change and transformation. But what was the catalyst for accelerated action and mobilizing of the private and the public sector that we've seen in the last couple of years? Because sustainability is not a 2020 phenomenon. 2020 accelerated the adoption and the sense of urgency to act for all market participants and players. But really the catalyst was 5 years ago in 2015, when the world got together and agreed on the 2030 agenda, as outlined by the Sustainable Development Goals. And the other key event that happened 5 years ago was the Paris Agreement on climate change. This really shaped the pathway that all nations need to follow to meet that agenda. So we moved from agreeing on the plan to actual execution. But interestingly enough, 2020 started with a lot of skepticism as businesses were struggling to survive. Many predicted that sustainable finance is going to be pushed on the sidelines. And actually what we saw is completely the opposite. We saw a huge acceleration in actions, commitments, and that comes across both the public and the private sector, across all regions. In Europe, the agenda around sustainable finance and mobilizing capital markets to finance the 2030 agenda on sustainable development started shortly after 2015. The Commission launched the Action Plan on Sustainable Finance and has really developed what I believe is the most comprehensive and ambitious roadmap for execution, which has a very good potential to create the blueprint for sustainable finance worldwide. We've seen many other nations and regions putting very bold actions as well forward. Interestingly enough, in September of this year, at the virtual UN General Assembly, China came forward with the commitment to become carbon neutral by 2060. And we're talking about China, the largest financer and builder of coal-fired plants. So this is sending an extremely strong signal to the world of how quickly we have to rethink, rebuild our economy and transition towards a low-carbon resilient future. As a prerequisite to recover, as a prerequisite to have a sustainable future. And similarly, in the private sector, there is a lot of action happening this year. And I'll give you some numbers. I mean, in Q3 of this year, we saw an all-time record of green bond issuance at about $70.6 billion US, coming in from a record of 150 deals. Many multi-billion offerings from corporates like Volkswagen, Societe Generale, Daimler, JP Morgan, Verizon, as well as many sovereign issuance was released to market. And in total, green bond issuance is well over 150 billion during the first 9 months of 2020. That's a 22% increase when compared to last year. And we're talking about 2020, the big shock on the economy. So that shift that I'm really talking about of capital towards the 2030 agenda for sustainable development and a resilient low carbon economy model. Also, it's very important to flag that it cannot happen without better standards, better definitions, and greater transparency. That's where all market participants have a very critical role, especially getting guidance and direction from the public sector, but the private sector is the fuel that needs to get mobilized in parallel to the public sector. And so for the fundamental obstacles that slow down integration of ESG into mainstream investment decisions, processes, workflows. And we've seen a lot of collaboration across the industry, across different market participants to solve for those critical challenges. Whether it's the industry setting bodies on sustainable standards, coming forward with the commitment to bring harmonization and clarity, whether it's the IFRS consultation paper, which was released at the end of September, asking for feedback from the market on what role organizations like IFRS should play. We also saw the leadership of the CFA Institute establishing an ESG working group, of which Refinitiv is also a member of, to harmonize and create standards on ESG reporting for financial products. And so there is a lot of mobilization and collaboration, which is critical when you're creating fundamental shift and change. No one organization, no one stakeholder, no one entity can solve for that problem in isolation. So that collaboration is critically important. And for us at Refinitiv, we believe that we have a very important role to play as well, as we've been working with this data for 20 years and building solutions to make it usable for investors. So we're very active in our advocacy role, in our collaboration roles as well to solve for the data challenges. A final point before I move on to the index. I think it's also quite important to reflect on an area that leads to some market confusion, and this is where commonalities are required and where they're not. Investors have been using ESG data, as mentioned, for quite some time now to develop different responsible investing strategies. There is no one-size-fits-all. There is a lot of diversification in that space, and that's great. That should be stimulated. But the fact that there is also a lot of diversification in the data due to lack of standardization creates some sense of unease, reluctance, confusion in the market. And from our perspective, we need commonalities on definitions, standards, and data disclosure. That's at the heart of the process. And on the basics, we need those common definitions. When we talk about sustainability and green, we all need to interpret it the same way if we have the same use case, of course. If companies are asked to disclose on their ESG footprint and performance, there needs to be agreement on the core metrics that they need to track, manage, and report to their stakeholders, including investors. So across those basic commonalities are must-have, and that's where we believe the industry needs to focus on immediately. But we don't believe we need commonalities when we talk about analytics, when we talk about ratings. And a frequent concern that we hear from investors is, well, I get very diverse ESG ratings for the same company. How is that possible? Well, our pushback can say, well, when we read and receive sell-side research recommendations, it actually adds more value to have diversity in opinion. And the industry is not confused by having different sell-side recommendations for the same company. That enables to look at it from different angles, bring in different perspectives, and make most informed investment decisions that enable market participants to differentiate themselves, to have a competitive edge over their peers. It's the same thing with ESG ratings. They provide wealth and breadth to the way that you can quantify quite complex topics and issues. So my advice here is for those that struggle with that challenge to really understand what each rating or analytic is doing and make sure that it aligns with the investment strategy that you have set for yourself, for your product, on the mandate you're working on for your customer. So Refinitiv and the Arab Federation of Exchanges have worked very hard, and we were very excited earlier this year to launch the Refinitiv AFE Low Carbon Select Index, which offers investors a unique ability to invest in the top 30 publicly traded equities across the Middle East and North Africa, and help bring the topic of ESG and specifically of climate at the forefront of investment strategies within the region. And we know that ESG and sustainability or climate change in particular has been at a different state of evolution across regions. So we've done similar work elsewhere, and we've seen it's generated a lot of momentum in terms of enabling the market to, with very practical tools, embrace low carbon investment strategies. And we hope it will deliver the same benefits for the region for all of you as well. In simple terms, the index offers an innovative benchmark for investors that wish to benefit from the market opportunities created by the shift towards more sustainable financial markets, the shift towards low carbon economy. And as mentioned, 2020 has shown us how critical and how urgent it is for all of us to play a role in this transformation. So I encourage you to get off the sideline and really start taking proactive measures to be part of the solution for the future rather than be part of the problem. The index enables investors to allocate to companies that actively invest in and promote low carbon activities in the running of their businesses. Since the index includes leading companies as constituents that are investing in reducing their energy consumption, their carbon footprint, it's also financial, it's also financing the decarbonization and positively contributing towards lowering the carbon footprint of the region. Again, if I link back to the Paris Agreement, all nations agreed on a pathway of decarbonization. There are no exceptions. And the public sector cannot do it alone. The economy cannot be decarbonized by the public sector. It needs to be decarbonized by the private sector. And financial markets play a very critical role because they provide the fuel behind the economy. And sending a signal that the fuel is going towards decarbonized economy is a very important ingredient, a very important message. So this is giving you exactly that opportunity to send the signal, but not only do it because it's the right thing to do for the environment, for our society, for our families, but do it because it's the only way to generate financial outperformance in the future economy, which is decarbonized economy. I think I'll pause here. Of course, there is a lot of documentation on the index, its construction. Happy to go in more detail if necessary, but I hope that that gives our audience today a good summary of why it's so important to take this issue seriously, why it's so important not to consider ESG or sustainability as nice to have. It's critical for us, it's critical for our economy, and it's critical for capital markets as well.
Thank you very much, Elena. This was very exhaustive and very enriching. I already have a question from the public to you that I will use a bit later. Now I would like to take the opportunity to hear from Khalil. So Khalil, as an investor, I would like to learn from you, how do you incorporate sustainability into your investment strategies?
Thank you, William. It's a pleasure to be among you today. Sustainability for us is at the heart of Misr Capital investment management and business conduct. Basically, the way we see it, it enables responsible growth, consistent performance, and fulfillment of our fiduciary duty. Our ESG policy is comprehensive, and our investment team incorporates ESG criteria in own investment research, along definitely the financial matrices, the metrics that we look at. It is quite important for investment managers to understand that ESG is not a political or social activism, but rather fully allied with shareholders' returns. So to put it in a nutshell, doing good means doing well. And we definitely have environmental considerations typically result in cost efficiencies and unburdened business expansions. Social responsibility, it ensures better talent retention and welcoming community. Governance ensures transparency and business decisions that benefit all stakeholders. And there are two main examples that come to mind. One of them is China's largest beverage maker. It basically went from being criticized for its water usage to being commended for its investment in river flow technologies, which put it in better standing and helped its production. And the share price outperformed other stocks later on. And the other example is the mining giant Vale, which suffered financially and reputationally when catastrophic incident hurt the environment and the community, and it suggested a lapse in internal controls, which negatively impacted shareholders' return. So finding a link between ESG policies in general and the financial performance of the company and the way it's going to impact your stakeholders and specifically the shareholders in that perspective is quite clear. And definitely there are many other examples that most of us are aware of. Whether this drive is gaining momentum, definitely is gaining momentum. It's getting traction from globally. If we talk about Egypt, for instance, most companies now, they have ESG policies in place. They have ESG criteria when it comes to their investment. Even the Egyptian government tapped the international market for green bonds. Elena already touched base on that. It wasn't an issue, but at least it's the beginning. There's $750 million in issue. So basically, it's gaining traction. We on the sell side of our company, we're currently having engagement for a green bond for plastic reduction. It's the first of its kind in Egypt, and it's getting support from the regulator, from all the stakeholders, to be completely honest. We see a lot of opportunities if we adopt ESG. So basically, it starts with the criteria setting. While ESG rating is growing in prominence, there remains room to sharpen and define a common set of criteria, because different sustainability indices and ESG rating bodies still often come to different conclusions about the same companies. I believe the drive that the Arab Federation of Exchanges is taking with its affiliate members and partners can play a role in this in our region. Definitely, we need to understand that some of those criteria, they will definitely need to be localized. Even the Paris Climate Accord, for example, it sets different goals in different areas of the world. And Elena can correct me on this. When it comes to product development, the creation of sustainable investing index, we're fully supporting of that drive. We have been discussing this drive with Mr. Rami, and in coordination with Refinitiv, and we're quite sure we will come up with a product that would be suitable for that. At this point in time, it's covering the low carbon, which is the E part. Already the governance is already implied, because governance is one of the pillars of any listed security, and here remains the social aspect. We, as Misr Capital, the buy-side research team, are willing to work on the social part and the effectiveness of the governance part on this. So those are my humble comments on the topic. Thank you.
Thank you very much, Khalil. That's very efficient. Now I would like, you both, Elena and yourself, mentioned the low carbon select index. I would like to ask Rami, if possible, to tell us how this index is different from other offerings that we have on the market.
The index is not the first pan-Arab index. As I told you, we have our friends at Housekeeping make a very generic ESG index. However, the Refinitiv AFE index is the first one focusing on low carbon select corporates. And when we discussed it at first with our partners at Refinitiv, all of them said that this is a core interest for investors in this time. All of them are focusing on low carbon corporates and equities to start investing in. So this is the first one. What makes it actually more different is the plan behind the index. So the index was only the mean for what we're trying to do. We're going to use the index to create proper products as ETFs and list it in more than 3 or 4 markets in the region to allow global investors to tap into the region's ESG equities. We're talking about 9 markets. So if you vote into this ETF, you will have access to 9 markets at once. 50% weight is banking. Most of the equities definitely is GCC. We have the entire GCC markets in addition to Egypt, Jordan, and Casablanca stock exchanges. So it is different. The plan behind it is going to be different. We're talking with our partners in Misr Capital for bigger plans for that index. What's interesting actually more about this index, for example, if you look into the 30 companies listed in or constituting the index, you will find you'll find names like Aramco and Sabic from Saudi Arabia. And everyone was a little bit furious about how can we include the biggest hydrocarbon producer in the world in a low carbon index. I had the same question myself when I asked our partners at Refinitiv. We said, in our part of the world, it is still in infant phase. So we have to give priority actually for transparency and reporting first. Although Aramco scores very low on, scores very high on carbon emissions. However, they're very proper when it comes to reporting. They're very transparent about it. So this is what we are trying to encourage in our part of the world, that we want to encourage all corporates to start reporting and being more transparent when it comes to their carbon emissions. Then at continuous revisions on the index, we can start creating other indices in that regard. So that's what makes it a little bit different. Great examples also. So Khalil, let me ask you, I'm sure you have conversations with global investors interested in the region, but now very much curious to learn more about how can they invest in low carbon index in the region. So where are you from this? Where are you at these conversations with these global investors interested in the region, but also interested in clean, let's say, actors in the region when it comes to carbon emission?
So basically, there are 2 aspects on this, the buy side and the sell side. The buy side, there are active managers globally who are putting ESG policies as a top priority. And those, some of them will not invest a penny unless they see it invisible. So it's part of our role is basically to convince and show the value added for the companies themselves of basically attracting ESG investors to this to them. So basically, if we show them the value added, apart from the ESG thing, let's look financials at this point in time first. Let's keep it simple to them. Seeing that value, seeing the extra demand on their stocks will make them believe on that. Adding the E part and discussing it in detail, and the S and G, and seeing its impact on financials and its impact on the society and the environment will definitely make them more eager to develop their internal policies, to upgrade them, to adopt proper policies. A simple thing is that 2020 have been unique in its own sense. After the lockdown, I believe most of us have witnessed basically a better weather in all fronts of the world, simply because we stopped polluting the planet. So the moment they start believing is that it's not just an environmental or social activism, and seeing its real value on their financial performance, this is the line they will cross to adopt it and having it as a religion, more or less.
I mean, we know that all religions also are pushing for more respect of the planet, because apparently God gave us the planet as an asset, and we should not be. So I like this calling it a religion. So our environment and our society should become our religion, and we should keep it for the next generations. Thank you for reminding us, Khalil. I would like now to give you a few seconds to sip some water, and I'll ask the audience for my third polling question. And the question is, will you plan to incorporate sustainable investing into your investment strategies going forward? Yes, no, I might consider it now, I'm unsure. So please feel free to share with us your answers. A couple of seconds before we go to the results. So will you plan to incorporate sustainable investing into your investment strategies going forward? Hopefully Elena, Khalil, and Rami were convincing. But at least, as Khalil mentioned, look from the window and you'll see a blue sky, you see more wildlife coming back to our waters, forests in Europe, etc. Some animals curious to come back to cities and see why human beings are staying at home and not disturbing them anymore. So hopefully this is encouraging people to answer.
If I may add something on this topic, I mean, it's great to see the short-term benefits of us being in a lockdown, but at the same time, we cannot live in a permanent lockdown. No. That's why it's so important to rethink our daily lifestyle and decisions, especially in the context of capital allocation decisions, so that we can drive for that change, for the outcome, and elevate the importance of economic and social coexistence in a sustainable way, so that our economy can recover and flourish in the future as well. So that's the most important opportunity we're actually given in these quite challenging times that we're all facing with.
Couldn't agree more with you, Elena. The pandemic and the lockdown is a pause for us, because we were so busy before that producing, growing, and polluting, and now this pause is giving us time to reflect, to think, restart our economies on a healthier basis. Thank you. So yes, 60% of the audience are planning to incorporate sustainable investing into their investment strategies going forward. 40% might consider it now. So this is why I think this webinar is very helpful. Please remember to ask questions. I already have two coming so far, but please feel free to ask more questions. Elena, I think I'll ask you this one because you were presenting and it came across. What can we do to ensure we rally and educate the relevant stakeholders to take strong measures in the next 2 years on sustainability? Thank you.
Yes, as mentioned, everyone has a very important role to play, and we shouldn't undermine the power of the private sector and the market. Let's face it, most of what we see till date is investor-driven. when we talk about ESG data, we already have a lot of information that companies make publicly available. Till date, there is no broad regulatory mandatory ESG disclosure standard. Therefore, all the data is produced on the back of investor pressures. So continue playing that very important role in encouraging companies to be transparent, to measure their performance and report on it, because this is the only way we as investors can hold the companies accountable, and we as investors can make more informed investment decisions. It's a similar critical role that exchanges play on this journey of improved transparency in working with public issuers to bring clarity as to what information they should report and ought to report in a consistent way to enable investors integrate those risks into their investment decisions. So that's, we shouldn't undermine the power of the market and the private sector and not wait for regulators to come in and solve all problems for us. And we see great examples around the world. In Europe, until a few years ago, a lot of the leading initiatives were led by the market. And the last couple of years, we see regulators stepping in. So it's the regulators that are currently shaping and driving this agenda. In the US, until last week, it was purely market-driven agenda. But there was still a lot of demand and a lot of bottom-up initiatives and collaborations and capital allocation shifts towards more sustainable investment strategies. Let's hope and see that there hopefully will be more political support of this agenda as well in that region, because that kind of enables and brings everyone on board. It's no longer those few market leaders that are setting the tone and are leading the way, but then the long tail is kind of passively waiting and observing. As soon as the public sector comes on board, the whole market is embracing it and is pushed in that direction. The second important piece is education and awareness. It's still a very immature topic, and we see the critical role of education to illustrate to the market, firstly, why it's so important to look into those considerations when making investment decisions. And secondly, show how actually practically it's done. And it's done in an extremely effective way, generating financial benefits. It's either enabling better risk management practices and decisions, or enabling to uncover market opportunities that would be left unseen and not invested in by those investors, that then puts them in disadvantage. And the third area is just bring the markets to product. And that's why I think that the journey that this index enables the markets to embark on is so important, because it makes it now investable to be part of the decarbonization without really having to be an expert in climate or an expert in decarbonization. So this type of products enable the market to act, and I think they're very important.
Great, thank you, Elena. The next question from the audience is to Rami. How can you explain adding petroleum companies to the low carbon index? Is it just for encouraging people for considering this kind of index?
Okay, so I just mentioned that, yes, we have Aramco, we have SABIC in the index, and I had the same question as the person who asked the question. When I asked Refinitiv, and we talked about it, we give priority actually to the companies who actually became transparent and they report their carbon emissions. So we encourage all corporates, listed corporates, to be transparent and bluntly report their carbon emissions as a medium to get included in the index. So we're not penalizing them for higher carbon emissions at this stage. At a later stage, we agreed with our partners at Refinitiv, with the ongoing every 6-month revisions, more corporates will go out, more corporates will go in as a result for the 6-month revision. So it's not actually to have a fancy or a marketable index or having a sexy index, including Aramco, but rather to encourage more corporates to be transparent about it.
I would like also Elena to
had
comment
a point
on the same, yes.
Yeah.
Yes.
Just a
Elena,
quick
would you like
comment
to add
from
your
my
comments?
side. Yes, the importance of transparency is critical at the global level, and even more so critical in the region. Without having the data, it's really hard to assess performance. It's hard to manage it, not only for investors, but also for the issuers and the companies themselves. And frankly speaking, the journey to decarbonize the economy doesn't mean you exit the polluting companies, the bad companies, take capital away from them, strive them, and allocate to low carbon sectors. That doesn't solve the problem. It doesn't solve the problem we're dealing with at the global level. What needs to happen is for the economies and the sectors that are high intensive, decarbonize, to rethink their business models, rethink the way they bring products to market and the composition, the inputs of those products, to really develop the solutions required for that decarbonization. So it's not about shifting capital away from sectors, it's about stimulating those sectors to decarbonize, work with them, finance them to develop the solutions required for the future. And transparency is key. We advocate and talk often about what gets measured gets managed. So at this point in time, there is lack of transparency, lack of measurements. So for this index, the first step of the journey is to give priority, give more points to the companies that are actively talking, reporting about their performance, even if it's really bad, because that's a really important first step. Then they can look at ways to mitigate those risks, to manage them better. And the capital of investors is very important in that journey.
So here I can see something like a virtuous circle rather than a vicious circle. You're not excluding them to start with, but you're monitoring their transparency, and you're hoping that they will at some point continue their transparency journey, but also improve their impact and actually lower the carbon impact on nature. And we know that money or capital is very important for those companies. So if they want to grow further, they need to attract capital. And capital will come only under one condition, that these companies are very transparent, but they're also improving and they're lowering their carbon impact on the planet. Okay. I like virtuous circle rather than a vicious one where we say, we're going to shy away from all the companies that treat oil and gas in the world. And because we have some examples in the Western world where the emissions have been lowered by those oil producers. And we can't lie to ourselves. We're still using cars. We're still using planes. Of course, solar is helping. Of course, hydrogen is happening. There are lots of renewable energies coming to help us reduce our impact. But we can't just rely. We can't just yet remove oil and gas from our economies. Thank you for that. I would like to go back to Khalil and ask you, from an investor's point of view, are you happy with the level of transparency you're seeing in the MENA region? And do you believe that with the capital you'll be handing and entrusted to manage, you'll be influencing that equation and pushing those companies in the MENA world to be more ESG compliant?
Definitely, William. As I mentioned earlier, it's definitely a two-way street. We're basically, you find investors and investee companies, and our role in that is basically to attract more investors, ESG investors, basically. But if we don't have the constituents or the companies, investable universe, basically, to invest in, then we haven't done anything. So it's the other way around. So basically, you're creating awareness among companies first of the importance that there is type of clients who will only invest in you if you do the proper disclosure when it comes to your ESG policies, and basically convincing them of the value it does. Not just attracting investments is not the end of it, but its impact on your stakeholders, its impact on the environment, the society, the governance. So it's a long journey. There is definitely a learning curve. It will not happen overnight. So basically, for instance, when a client asked me around 9 or 10 years ago about what's our ESG policy, it was a European insurance company who asked me that question. To be completely honest, I was ignorant and I was open my mouth. What? And I said, apologies, but I'm not quite familiar with that. I'll have to study it. A few years down the road, with my ex-employer, we had a proper ESG policy. We signed the UNDP program, and it progressed going forward. But having launched basically a vehicle to only invest in ESG compliant companies back then, it wouldn't have been possible because the investable universe was quite low. So, which takes me back to the disclosure, because, okay, we can brand the company as ESG compliant, but without the proper disclosure and the developments it takes along the way, it wouldn't make it. So basically the inclusion of SABIC and Aramco, who basically have proper disclosure, and it doesn't mean that they will always be on the index, because if they do not progress from here or improve or basically reduce their emissions, that doesn't mean they will always stay because they're disclosing it. It's just a starting point. But I believe disclosure is the key here.
Great.
So,
Elena, there's a quick question for you. You mentioned that there will be a revision for the list of companies included in the index every 6 months. What kind of companies do you review to be included in the sample? Are they the companies that only publish sustainability reports?
No, so the methodology of the index, and as the name suggests, really focus on the climate side of the equation rather than the comprehensive ESG or the sustainability performance of companies. We don't use only sustainability report to collect data. We go through all publicly available information sources. So any company that reports its carbon footprint is certainly in scope, and not only in scope, but will be given a priority because it's transparent regardless of where they report and how they report. And it's very important to show progress over time, to track the performance over time and publish it, because that enables to see the direction of travel for a company. So even if a company is a very high emitter at one point in time, the trajectory is very important. As we know, there are different climate scenarios, and the decarbonization of the economy will not happen overnight. So tracking performance over time is key here.
Great. My last quick question from the audience is for Rami. How successful has the index been since the launch and as a benchmark in the region? Rami, can you hear us?
Yes, can you hear me?
Yes, please go ahead.
Hello? Yeah, can you hear me? Hello, William, can you hear me?
Yes, Rami, we can hear you.
Fantastic. So we were talking about the performance of the index when we were reviewing it. When we actually established the index itself, it was outperforming other regional indices in the area. Let me give you some examples so far. And for example, the total, the year-to-date return versus other indices, it only went down by 14%. We've seen other indices in the market going down by 25%, 2%, and 15%. The 3 years return for the index was almost 3% versus many other indices that were less performance. So we're seeing good traction in this area. And I believe it is doing quite well. 50% of the weight of the index are banks. So banks are doing really well during this year. So we're believing that is going to be outperforming for other companies as well.
Great. Thank you very much, Rami. I would like to take this opportunity to thank each and every one of you who took 60 minutes of their time to be on this webinar. It's been a great pleasure. I personally learned a lot. I learned about decarbonization. I learned about global collaboration and regional collaboration. I'm very hopeful that with the new leadership in the US, we will be able to go back to the Paris agreements and see hopefully also China having less footprint on the global pollution and other countries. I like when one of the panelists said we're doing good, but we're doing well, which means doing good for the planet can also be doing good performance in your financial results. So let's hope that's win-win strategy between ESG, sustainable finance, and financial results will encourage capital to go to the companies that are respecting our planet, are respecting our society, and are leading into stewardship. Thank you very much, and hope to see you all soon. Please stay safe. Bye-bye.
Thank you. Thank you. Bye.
Thank you. Bye-bye.
Bye.